Well, good morning, everybody. I've got Alan on with me this week. We're going to try a little bit different format. Instead of going live, we're going to pre-record this and edit it down so you get better use of your time. So today we've got a few topics to talk about. We're going to look at price action, of course, look at the charts. But Alan's got some updates for us on Ethereum. The merge is supposed to be coming this summer. Some news around Loopring. I've got a few updates on some tweets that I put out, one bit of Cardano news, and we're just going to keep it casual and have a nice chat today. But good morning, Alan. How are you doing over there? How was the move?
Yeah, good, and good morning to you. Good evening from Dalian. So yeah, so much has happened in the last few weeks where we've moved. People will see the curtains have changed in the background. And yeah, we've moved down the road. We're still in the same part of the city, but it's been really busy. So had a lot happening here, all sorts of things. But I've put on Twitter my visa's extended for longer term stay now, so we've got many more options. So in the hope that the world gets back to normal, should allow some travel as well, backwards and forwards. So yeah, all good. Interesting times as ever. So
All right, so just to get started here with some useful information, I put together some daily health check dashboards just as a little plug for our Discord community. And so what I'm going to be doing is daily after the close, whenever these metrics update, I'm going to be updating our community in Discord with what the latest status of these metrics are. But you can see here on this dashboard, I've got balance on exchanges. For some reason, the derivatives data on Glassnode has not been working for me for the past couple of days, so we'll work on that. But this is the perpetual futures funding rate, and I'm looking at the number of addresses with balance of greater than 0.1 Bitcoin. I think this is, you can get non-zero balances, you can get greater than 1 Bitcoin. I think this is the best representation of just general activity across a broad spectrum of market participants. A balance of 0.1 Bitcoin means you have some skin in the game. It's not necessarily a dust wallet with basically nothing on it. It's got something on it, but it's not a huge. We're not looking at larger participants with 1 or 10 of Bitcoin, which I don't think is a fair representation of broad market adoption. You can see this is up and to the right, and then so the top two metrics are just balance on exchange. So for me, these are some of the more important short-term data, right? Are coins coming off of exchange? This indicates hodling behavior. And then the number of wallets with a reasonable balance continuing to increase. And then over here on crypto quants, basically the same data, but we're just getting crypto quants take on all the same data. But what I do have a little bit, I've added on this chart. Glassnode does a little bit better job of displaying this number of addresses with 0.1 balance, but crypto quant does a better job of displaying open interest. So what we're looking at when we look at open interest, this is the number of contracts open against the underlying asset of Bitcoin. And so if it's increasing, whichever direction that the funding rate is, we know that there's probably a decent cohort of that particular side. So as you can see here, the open interest was increasing all from March 10th until today, roughly. And you see March 9th, 10th was the short side. So that means that in this area here was a pretty good cohort of short side interest joining the market. Then we had a couple of days of positive from the 14th to the 16th. So you had, that was net long on those days. So all in all, this is fairly neutral, as we expect the open interest chart to continue to go up and to the right. If I were to reset Zoom here, you can see over time, open interest is very strongly trending up, just like price. So there's a couple of dashboards I'll be sharing daily. I want to share that. Many of you know I posted on Twitter that I'm in a trade. As soon as we bounced off of this 50-day moving average over here, I got into long positions. I was waiting for a longer period of time above, but really what I was waiting for was the 50-day to move upward. You can see the 50-day is now sloping upward, so I've taken a small initial position on that bounce, those bounces off the 50-day, and then we're coming into the 120 next. So I'll be looking for more positions to add that position, to build up that position on this side of the 120 as well. And then I'm gonna pause there. I've got a bunch of tweets. We'll talk about these at the end, or I'll make a dedicated video on all these. But just wanted to give my updates and turn it over to Alan. Alan, I think, has some pictures. So back to you, Alan. And so let me ask you just a general question. In Dalian, where you're at now, are you very far from where you lived before, or are you in the same basic area?
Yeah, we're just along the road, so just
Okay. Down the
literally
road.
like a half a kilometre further along the harbour. So yeah, so got a nicer view.
You have a nicer view.
So
You had
got a
you had
nicer view. We didn't have much of a view before, so we had the curtains closed. But yeah, we've got a nicer spot here and lots of
I saw you
options.
post a picture of the bay. Is that from your balcony?
Yeah, so this is from roughly where we are here, with cameras and zooms and stuff, but got a lovely view of over the harbour here in Dalian. So and this is looking back towards the sort of main port is just off to the left of this. A lot of this along the other side of the harbour is the oil and gas terminal part of it here. It's the biggest one in Asia, I believe. It's enormous. It runs all the way.
Oh, really?
Through. Absolutely enormous. Yeah, crude oil terminals, the biggest one, I think, biggest one in China, and the biggest one in Asia. So, so we talk about where a lot of this oil's going. Everyone's talking about it ends up in a ship and ends up in Dalian. A lot of it. So, yeah, crazy. So, so yeah, sort of fossil fuel country historically and heavy industry, but obviously now very different city, lots of technology. So if we look the other way, I mean, this is back towards the city, you just get the towers. But in the middle here, these towers are right in the city centre, downtown Dalian. Sort of geographically to the right here is where we were just looking, and to the left is the hills and the sea again. So this is where we are on the tip of the peninsula. So behind these hills over on the left is sea as well, on the sort of southern coast. And this downtown is where we go a lot. This is the main, we've got shopping centres, everything in the town. A lot of high rise, and with 7 million people, this sort of high rise just goes on forever. Chinese cities, and if you go to Shanghai, it sort of blows your mind. It just goes on literally forever. You never seem to get out of the city. Dalian's big as well when you follow it around the coast, and there's just these high-rise housing everywhere. So yeah, and we've obviously been in the summer. I've been here a year, so it's been remarkable for me, and first time sort of living overseas, if you like, after all the years in the UK. So it's a big deal, but love it here. Very happy. So it's I put on Twitter a little bit for people, it's like there's always a lot of naysayers if you try and do something unusual. I'll always tell you why it's not going to be any good or whatever. It's just follow the courage, get your courage of your convictions and go and do what you want to do. It's the way, particularly go and see the world if you can. It's
yeah, I can't wait to get back out. So I've been, sequestered with a young person in our house now. He's going to be more of a little boy than a baby, and then the pandemic and everything else. It's like we're definitely itching to get back to doing some traveling and seeing some. I haven't seen, the only water I've seen is the Texas coast, in the past couple of years. This is like really abnormal for me to not have traveled in this long of time, but at least the Texas coast, while it's not as scenic as that, probably it's got some good fishing. So that's at least I have that.
Well, you got to be able to relax. I mean, here we've just got so many miles of coastal walks and parks and things that you can disappear off, and if you need, if you enjoy that to relax. So yeah, I've sent quite a lot of pictures of this area from down on the ground, and
right.
The conference centre is just off the left of this, where under normal times the World Economic Forum summer series is there, and yeah, I mean, obviously this is the area which is just developing like crazy. Still got construction everywhere if we look out from here. So for all the ups and downs of the market here, and you see these towers. I've obviously angled the camera, but below here there's construction all over the place. It's crazy. So Just so different to the UK. I mean, just so different.
Yeah, no, that's a good observation.
So yeah, so there's just hope that travel resumes. I mean, there's also some good signs. We're seeing direct flights to the UK just tentatively restarting and some other things. So we wait and see. Obviously, still battling COVID here. The few restrictions here. We've seen up in Jilin province, it's the next place up from this province, as they've had a big outbreak, tens of thousands of cases, and they're fighting that now, and it's overspilled down here, but we're pretty good. We're still open. Cases are in the province here, we're like 30 and 20, so it's not. But we do notice the quarantines back in the city. There's additional restrictions in some places, so we're staying local, but thankfully the local cafe's still open. I can still go and get a coffee across the road, so it's still good. And people are all at work, and I mean, that's the media talks about lockdowns in China. People are still at work here, so it would have to get much worse before there's any real extreme issues. It's mostly this area's tourism that suffers. I mean, it's just, again, it's spring here, it should be very busy, the weather's getting better, and obviously we just don't have any tourists here, which is mad. And that's been the last 2 years. They've had a almost like local tourism almost from the province, and nothing. So mad, so I don't know what this summer will bring. We'll wait and see. So so moving on to have a quick look at these charts. Obviously I tweet quite a bit about total cap. Something I've been keeping an eye on, as it's tended to be a pretty good indicator as well, both short-term, long-term, of where we are. You can see it's similar to Bitcoin's chart, which of course it is, but it shows here, I think, quite clearly we've got this level 1.963 trillion, which has come out here as a 2-week. You can see we've got two order blocks here, which we're now back into testing again. So, and I said on Twitter a long time ago, I think until we're back above 2 trillion on total cap, then just be cautious with crypto. And obviously we're back up into testing this again now. Excuse the noise if it sounds like something's crashing around in the background here. That's the wind is blowing and something's knocking in the building. It's one thing about Dalian you discover is it's always windy at times, and it's very, very windy tonight. I've got storm coming. So we've had days, honestly, you can't stand up. I mean, it's so crazy windy at times. So a bit like crypto markets, you might say, when the wind starts blowing. So here, total cap, this has just been good for me, just watching this whilst we're in this range, and we've got a 2-week sort of from this May, June, built this sort of level that's provided support. We're sideways in this, trying to get back above this 2 trillion area. And I think whilst we've had a nice bounce, this is heavy resistance. So I'm waiting to see. The other thing I noted was just how long we've been in this pattern before we jump back up in the summer. It was like the 9th, 10th week, depending which way you count this big bearish candle. We're about the same time now, so I'm just keeping an eye on this and saying, are we now going to see a breakout from this consolidation? We'll see. There's some good signs. Obviously, your dashboards are showing there's quite a lot of sort of bullish metrics there. And I've not flipped into a bear market. I don't see a bear market at the moment, but obviously we'll be very cautious, because with this, particularly with the macro position, with the war in Europe and all these other things, there's a lot of uncertainty as to exactly what's going to happen next. Obviously, we'll have a look at that a little bit later, but this is one of the main things I'm looking at, is just, will we get it are we going to get out of this consolidation? Will we go up or down from this? Right, from this range? But we've wicked here 3 times on this, so there's definitely some buyers when we're coming in here. So
and that's what's interesting about that. The total cap is, I kind of get the feeling that at some point in the near future we're going to have a mostly Bitcoin run. I won't say only Bitcoin, but Bitcoin and really tightly correlated cryptos to Bitcoin, maybe like a Litecoin and probably Ethereum, will all probably move together. But the question is do altcoins, the smaller altcoins, the mid caps and small caps, really do they lag? And that would, that could give us still some movement in crypto while the total cap doesn't move as much. But obviously Bitcoin and Ethereum are trending upward, the total cap's going upward. So I'd be curious to watch, especially I think the next move, another way of putting it, I think the next move is going to be the large caps. So led by Bitcoin, maybe Ethereum. Ethereum could lead the way out. Frankly, you look at Ethereum's metrics, same basic metrics, exchange reserve being one of the key ones, and the addresses, the active addresses, they're just as bullish, if not more bullish, and some of the metrics than Bitcoin. So with the we're going to talk more about it, obviously, but with the ETH 2.0, the proof of stake merge happening here in the next few months and really going heavily deflationary, I suppose it could be Ethereum that actually leads us out, which happened. Well, that happened in summer of 2020, the DeFi summer of 2020. It was Ethereum and the DeFi stuff that led, and then Bitcoin followed.
Yeah, I mean, I'm just as a note here, I don't think I've clicked anything. I think TradingView is just struggling to give me trend lines at the moment. It's still updating, but it's being temperamental. So, but obviously what we have seen is this, I put a tweet out that attracted some comments, but we've seen another sort of hold of this trend channel, this upwards channel that's come through here. So this is still holding up. We're still, looks like we're making the higher lows here as we move along. So as you say, it'll be interesting to see what the market does with the merge coming. And my time scale, I'm not someone who's in a particular rush thinking we run to 100,000 in April or something. I'm looking longer through this year, I think, is my
So you can see here on my chart, I had some, horizontal levels I was watching as my main levels. So I don't trade off of trend lines or even the SMAs. These are my momentum and trend indicators. This is how I gauge trend and momentum. I buy and sell off of horizontal levels, right? So for me, what happened was Ethereum hit the top of this channel, rolled over. And so I've been holding, I had almost 20% of my portfolio was Ethereum when we exited, on this move, this price action over here. And I've been heavy Bitcoin since then, waiting to rebuild my Ethereum position. And because the market dynamics have changed so much, the way this has all played out has been very different. So I'm having to take just an active, kind of trading position on it. But I'm rebuilding my Ethereum position on this. Here's the technicals I was looking at, right? We're in the upper half of this channel. So basically, we've kind of maintained this general uptrend through here. I had a weak downtrend trend line. We broke that to the upside, and we also broke the 50-day moving average. As we bounced into the 50-day moving average in this horizontal level, this is where I started rebuilding my Ethereum position. So this is my first significant add. And basically, every dip on the way out of here, I'll be adding a little bit more Ethereum until I get back up to 20%. So that's my goal, is to get my portfolio back to 20% in Ethereum. So I am now starting that rebuilding process.
When it all goes haywire, you can blame me then for your.
Yeah, well, that's the thing, is that I'm still pretty light, because I still think there's a good chance we make it to the bottom of this channel, this trend line. And so if we were to lose these levels, I would get down sub 10%, right? So right now I'm really trying to get, I'm close to 10% right now, right? So my goal is to have a 10% position, eventually rebuild it to 20%. But should we break down, the other thing I will do is I'll go back down to 5 to 10% until we reach bottom again, and then start that rebuilding process. And this is a long term. So remember, I'm not looking at this for a day, a week, or even a year. I'm trying to get my position back to 20% Ethereum for almost indefinitely, unless we have another one of these moves. This type of move right here, the market forces me out. When Ethereum makes this big of a move versus Bitcoin, and Bitcoin's already uptrending, right? When Ethereum goes from, for me, I'm like this big spike here is where I sold my Ethereum. This is the market forcing me to sell, because it made such a huge move. I know it's going to either consolidate or come back down. And so this is where I sold my Ethereum, was pretty close to the tippy top there, and I missed this whole other move. But for me, it's now a rebuilding process, you know, like I would have been over here, rebuilding that position size back. And if the market were to, you know, if I get up to 20% and Ethereum takes off to $10,000 to $20,000 as it starts to show signs of coming into resistance, I'll get back down to, you know, a few. My minimum, I'll never be under, say, 5%. Never under 5% of my entire crypto portfolio will not be. So that's my long term. I'll never sell it. You know, same thing with Bitcoin. My long term Bitcoin position that I'll never sell is about 10% of my, so about twice the size. And then I've got a Cardano in there, which is probably about a 2% position that I'll never sell. And the rest of it, the whole rest of it, I'll go to stable coins. You know, if the market conditions really are euphoric and parabolic, I'll be 70% stable coins and, you know, or 80% stable coins, and then a mix of Bitcoin, Ethereum, Cardano, and you know, maybe Elrond starting to kind of get into that position where I'm just not going to sell it, but that's about it in my book. But that's where I'm at right now. So I'm gonna. Did you get your stuff fixed over there, Alan?
I think it's come. Yeah, I think it's back to.
We can work on my charts. Let me know for sure whenever you
Back to
get it
life.
back.
So let me pop that on. Check you can see that. So
Yep, looks good. All right.
we're back. So obviously weekly chart we've held up on this channel from where I had this drawn. So yeah, so we've held up and we've come out of this downtrend. Obviously trend lines there just popped in on a daily. So you're looking a bit odd on the weekly, but we've cleared out of that downtrend now. So so we will see. I mean, we obviously could say we're still sideways at the moment, consolidating from over here really. But still making these higher lows. So kind of what we want to see.
Yeah, no, it looks really good.
Yeah, I mean, I've got some yield being generated by some of my ETH, so I'm just waiting to see what happens at the moment. Nothing's changed for me in terms of my bull case on Ethereum. So obviously on USD, we've got heavy resistance. Now I've got my two looks at this. This was from the this trend line was from the bear market low and the obviously prior high, which has been pretty good and in play, and obviously climbed down to the base where we've come in and tapped it again in this correction. But we've got 2 week here, 30.60, 31.51. We've got these order blocks here. We've got quite a lot of resistance, just like with total cap and to some degree Bitcoin. So we've built this structure. It's just going to we'll see. I'd be very surprised if we can just fly through here. I think there's a lot of resistance here now. We will see. I mean, you know, just doesn't look like a bear market to me at the moment. That could be famous last words as ever, but it just doesn't. And we've looked at dominance quite a lot. You know, we've just not really had a recovery of dominance of Bitcoin to any significant level. It just sideways in this range, but historically low and still in this downtrend. So the more we zoom out, the more it's in a downtrend. So you know, I'd struggle to think that was breaking upward looking at that chart, but we will see. You know, it looks like it's continuing where it's been going, and you can just, as we've said before, I mean, that for me is just a sign of crypto's development. It's not all Bitcoin. There's a lot going on, so I don't necessarily see that as a problem. It's just what it is. Ethereum dominance, we got back above halfway on this channel. There's a bit of fighting on the lower time frame if we look at it. So that's again consolidating. We got the top here that we talked about before on this channel. So again, if ETH does make a big move, we should see this climb back up. But in the same way as Bitcoin, if Ethereum dominance is not growing, that's not necessarily a negative for Ethereum if the whole space is growing. So, obviously other cryptos that I've talked about and followed for some time. So we'll take a quick look at total 2, similar looking pattern. Again, this is without Bitcoin, so everything else in crypto, similar pattern, slightly different order blocks, but again, we're up into this same heavy looking resistance now. If we break through and re-establish this as support, that would make me significantly more bullish. Looking forward, that really what we need to see is the same on total cap, flip it back to support. The other things I've still got an interest in, I mean, this chart's pretty crazy. Polkadot, I mean, that's the ultimate in coming back to the bottom of the channel. That one, it's sunk completely back down, but it hit the line and it's held up again. So, very sort of amplified, I guess, from Ethereum where it is now, which has pretty much been the same as Bitcoin percentage-wise. This is exaggerated off that. It's come down a lot.
Yeah, that's been interesting to watch. Well, I still have a bag that's just collecting, compounding at 12%. So
yeah, me too. It's not a big bag now. It was trimmed, but it's still there, and 12%. And it's when you look at some of the metrics with Bitcoin, Ethereum, different usage, Polkadot sits behind as an ecosystem, a lot of the metrics, it's quite a lot going on that doesn't create that much noise in the
it does. There's a lot of projects that are coming out of that Polkastarter ecosystem, and there's a pretty big community of stuff being built around Polkadot for sure.
Yeah.
The other one that I
find an NFT or something, isn't it, that creates an explosion of an ecosystem off the back of it, because I think that's where it struggled, is to get that big explosive kind of adoption, whereas Ethereum's had DeFi, and we've had the NFT space, which is still very early, and all the applications of NFTs and what's been branded Web3, and that it's where they find some traction. I've said before, I mean, a lot of times you see the smaller competitors will need to find verticals, or need to find something that is their space, and then they will thrive in that space, and then maybe break out of it in time. We talked before, many of the case studies, Apple was one. People find it weird today to think Apple was basically bankrupt and struggling and sat in education and design and things as a company, but that's exactly where they were. And it goes to show, though, that they hung in there and sort of dug in and was surviving in those spaces, and then broke out again with some innovation. So we'll see. We've got some news on Loopring. But I've trimmed back some of my positions, and played a bit of defense. I'm mostly Bitcoin and Ethereum is my biggest position now. So and I'm not with everything, but I'm trying to earn some yield. I mean, we've said before, and I would say to people, is earn some yield, but beware of the risks. The more DeFi protocols you layer, the more risks you have of some rug pull, and then you can't get your money out. And you can buy insurance. It depends on how much you've got there, what it means to you. So.
Have you looked at Avalanche at all? So related to Polkadot, I've been really keeping a close eye on Avalanche's development.
I only watch it through other influencers, really, and they talk about it. It's not something I hold, and not something it's just that I looked at it and there wasn't much that I wasn't seeing in the Ethereum ecosystem. So I thought, I know I'm in Bitcoin, and I know why I'm in Ethereum, but I'm sort of looking around for things that are a little bit different, and I wasn't seeing a huge amount. And obviously, if we were in a more bearish environment, those are the things that tend to get absolutely smashed. So I wasn't thinking I wanted to take a position at the moment. Was my thinking. Yeah.
My thesis on that is, the DAGs are just they have an advantage in building certain data structures. And so a decentralized ledger, and arguably, depending on how you do it, is a little bit more efficient orchestrated through a DAG. But the problem is, historically, as I found out with IOTA, as I was a big kind of proponent of that project early on, is there, in order to orchestrate the building of the graph, you have to have some kind of central orchestration. And that's what I think Avalanche really, when I look at their snowball mechanism and how it works, how it builds a truly decentralized consensus model that can orchestrate consensus through a directed acyclic graph that then is able to build blockchains underneath it, and you can have multiple blockchains that are all being managed with the same overlay consensus mechanism that's actually a directed acyclic graph. That is a unique innovation to me, and it allows them to do some things that are unique. So if you look at their smart contract finality time, it's actually really, really compelling. Now, there are a few Byzantine conditions where when the system is operating suboptimally, that Avalanche isn't as compelling as you would like, but there are proposals to kind of start to chip away at fixing those issues. So it's just, to me, it's the first time I've seen somebody actually solve the problem of how do you properly decentralize the orchestration of a DAG for the purpose of building a decentralized ledger, right? And so that's the innovation there for me. That's why I've been really keenly interested in it, because I do think one of the next big themes is blockchain alternatives, right? So the point of a blockchain is to build a decentralized, consensus ecosystem or decentralized consensus protocol for creating this history of a secured ledger. And there are more efficient ways than just having all of the nodes communicate, waiting transactions in a memory pool and then writing those into blocks, as has been shown by HBAR and Phantom and IOTA, but they all had centralization problems, whereas Avalanche has solved, in my opinion, those centralization problems, and so has another much smaller protocol called ALF0. But those two are two DAGs that have kind of solved the decentralization problem. That's why I'm super interested in them. But you said with Ethereum layer 2 and different scaling solutions and rollups and the multiple different ways of scaling, and then plus upgrading the base layer, it's debatable how much of a benefit these DAGs are going to be when you have a sharded base ledger and then you have all the universe of scaling solutions. I think the main benefit is that you don't have to bounce between different scaling solutions for different applications. In theory, you could have a more robust, base layer that has the segmentation needed. So I think that's, and for me, another thing about Avalanche is it's more of an interconnection play. So it's really a direct competitor to Polkadot, because it allows this orchestration of a large number of blockchains with one over the top consensus mechanism, similar to Polkadot, right? It's got its main parachain, its main consensus, the layer 1 consensus, and then it's got all these shards, these parachains that snap in. But Avalanche is a different way of doing that. It's much more dynamic, so that you can have basically an unlimited number of subnets, whereas you only have 128 parachains. And so that's the other.
I've said before, Brandon, I think there's a lot of parallels with the traditional database world in my years of IT, and seeing many different ways to solve how you run a database. A few years we had SQL and that was it, and then we've sort of moved in now, and there's all these NoSQL versions and Graph and all these other technologies that allow you to do things. I guess it depends whether you're investing around those technology layers or the applications that sit on top of them. And as I said a minute ago, I think I'm looking at where are the applications that are getting the traction sitting, and the traction in terms of real adoption in the non-techie crypto sphere a little bit as well. Who's buying something and sticking it on their Twitter profile or whatever, that just creates noise. When I still struggle to see an awful lot of that elsewhere in crypto. Bitcoin has its own meme and its own story, as we know, and the currency story is very prevalent at the moment again. Ethereum's finding an awful lot of these examples where we're getting explosive use, whether it's the you know, some of the yeah, so some of the applications like the fantasy football application, but you can see the user counts are the sort of like traditional web 2 world, as it's being called. They're in the hundreds of thousands, if not now into the millions. So, you know, those are the things I'm looking for, and I'm still looking around at some of these great technologies. It's like, are you buying into one of those databases like that, or are you still holding your Microsoft stock from 1995? Because, you know, they still dominate in the traditional world, you know, along with Oracle and some others financially. So, you know, maybe I'm just a bit of a cautious traditional investor in that regard, but that's, you know,
You're looking for
I'm watching the applications world, just looking what's got a buzz with it that's coming. But there's no reason why that can't happen on any of these technologies. It's just who's the innovator at the front.
right.
Yeah,
Well, the reason I bring it up, you brought up Dot's chart, and I'm just going to share this chart, and then you take it right back over here. But the reason I bring it up is I've been watching this setup on AVAX. If you're a pattern
big
trader,
old wedge.
yeah, I like on altcoins. Patterns work out typically pretty well. Actually, I don't know why they work. I think it's because with altcoins you have this surge of interest, and it kind of happens pretty fast. So it's a little bit harder to trade altcoins around you know, more traditional TA, because they trend. When they start to trend, they trend so heavily, and so the patterns end up working out really well, because you can get these, you know, you can catch moves, these big moves where it's just a quick bull flag and a breakout to the upside again, or like in this case, this is a bit of a bullish wedge. And so you had this more or less a neutral consolidation wedge. We broke into the upside of that, and we're putting in this very, you know, this bullish wedge pattern on top of this, or this breakout. So it's kind of like really good breakout confirmation. So if you didn't take the actual break of this move and you're waiting, this is where it's still really good trading setup, and it happens to be a project I find, as far as technology goes, interesting. But that's why I brought it up.
Yeah, I mean, I must say I'm very neutral on these things. I don't think there's maximalism is helping anyone. Obviously, there will be a lot of supporters of Avalanche, like there is with other things, and clearly have some very smart ideas and some good implementation. I've always got that caveat, particularly if they go for DeFi. And again, I don't know where they're focusing their efforts. Is what Ethereum's got now, and it's a difficult thing to get. Is this battle hardened kind of proof of the technology as well? Every week we go past with another, you know, however many hundreds of millions of dollars are shifting around. You know, that certainly has some weight in that world as well. So, you know, but that's, you know, that's the new entrance problem in every market. You know, how do you prove yourself? You have to start somewhere. So
I think Avalanche is, I forget the projects, but there is quite a bit of. So here's the main competitors, right? I've compared these three before: Cosmos, Polkadot, and Avalanche. And you're looking at interchain operability and scalability. These are the three big leaders in the space, right? Cosmos is the original, really good project. I definitely still like Cosmos.
yeah, I
Polkadot
traded
was
it.
the one
Not
has
holding it.
huh?
I traded Cosmos, but I'm not holding it at the moment. But yeah, I traded it.
Yeah, I think we both kind of probably steered more toward Polkadot, because there was going to be a lot more hype potential. Not that Polkadot's that much better than Cosmos, and they're different ways of accomplishing the same thing. But Polkadot had all the parachain auctions and a lot more potential hype around it. But Avalanche is the new kid on the block, right, in this space. And I would rate, on a technology perspective, I would rate Avalanche pretty far head and shoulders above these other two. The problem is, because they're head and shoulders, it's just a different technology stack. And so we've seen, I've been watching them pretty closely. They've had a couple little hiccups where, because it's not a, you know, sharded ledger blockchain, which is a little bit easier, it's more figured out now, a lot more, you know, understanding around it. They've had a few hiccups, but that's what's caused this recent dip. But yeah, they have a really strong story. So anyway, it's just, when you brought up Polkadot, I thought maybe we talk about that for a minute, because these are the three that I'm tracking in that space. And I don't know that any one of them is going to be the winner. It's just a matter of which one does the best from here. I think they're all going to be around. That's kind of, more my thesis there.
Yeah, well, we've seen. I think the technology is good in many of these blockchains. I'm curious where, if we get through, and I know I'm not necessarily a 4-year cycle believer the same as some other people as markets mature, but I think I'm curious to see which ones of these projects survive. If we go to the ETH ratios of some of the projects that were very strong in 2017, they look terrible now, some of them from then. And again, you could say the tech was good at the time and what they were trying to do. So I'm just curious to see where these applications come that give it purpose in the end. People maybe invest, a lot of people are speculating, but it's not necessarily this tech. It's going to be what do the users actually get at the end of the day, that's beneficial. This is the challenge for me against the layer 2s, and it's not only Ethereum, it's just, but where is your actual advantage for the end user going to come from outside of that ecosystem? Since 1559, one of the things that's been remarkable has been there's like when you submit a transaction now and you do that on Ethereum, it completes sort of like every time. You don't get that mystery, which was the gas mystery with MetaMask off of pre 1559. And if you're getting completion in 10, 12 seconds, or you get it almost instantly on a layer 2, I can see why people want all this faster finality and all this scaling and etc. But in the end, I don't think the users are going to care that much. It's back to the thing we do with most of, like, we're using Twitter. Do we know what Twitter's database is that sits underneath? We don't care in the end. So I think there's some of that is going to play out in the end. I'm watching to see, because we sort of half missed NFTs. I remember we talked about it in Discord, like way back at the start, that there needs to be an exposure to this, because I've sort of ended up with Ethereum as well, NFT exposure, but actually NFTs did explode. We saw the same with DeFi Summer. It's just now, okay, so what's coming down the road that might gain some traction here? We touched on BXV a little bit as well with, is AI going to be a play? And, very, very, very speculative, but obviously it was a good trade. Is there going to be some more sectors that some of this technology supports? Because that would make it more interesting.
So to your point of adoption, I just want to bring this up. So DeFi Llama, the total value TLV for DeFi from what they're tracking is $215 billion, of which Ethereum has almost over half of that by itself without the help of Polygon, right? So 121 billion, and then the little three Polygon is tiny compared to the main chain. But Ethereum's is just about, pretty much half of a little over half. Then you got Terra, which is blowing up on the back of the stablecoin and Anchor protocol and UST. But behind them is BSC, which had this big spike and it has been actually declining as others pick up. And then Avalanche is the 4th largest TLV. So something else to keep in mind, it's bigger than Solana, and a lot bigger than even Cardano and Elrond, which are way lagging. Avalanche has a massive TLV, so something else to keep track of. And Avalanche is cap supply and deflationary. So it's because it's so efficient at its consensus layer, it's already deflationary. Like it's actually the only one on this list that's truly deflationary right now. So a few more small side notes. But yeah, it's actually really big. $10 billion value in TLV. Deflationary token with probably the most the best smart contract performance numbers there is, as far as smart contract throughput, how many smart contract elements we can compute every cycle, and then per second would be a good way of measuring that in the human terms. But then also the fastest finality, so it's 2-second finality. Smart contracts execute and are finalized in 2 seconds, which is, again, I think if you look at this, we keep bringing this project up. Yeah, Cosmos is 6 seconds for finality, because they have some optimizations they've done there, and like Polkadot 60 seconds, so it's a minute for a finality on Polkadot, whereas Avalanche is sub 3-second finality. So it's a really impressive technology stack, and it's got adoption. So just two really interesting things to track on that one. All right, back to you. You want to take over? I just wanted to, there's a little segue here because I'm starting to I still have my Polkadot bag, but in lieu of adding to Polkadot or Cosmos, I'm adding Avalanche over time. That's basically what I'm getting at.
Yeah, well, absolutely. I mean, Loopring, we can look at the news in a second, but that's, again, I mean, what a crazy crypto chart. Looks more like the nickel chart at the moment. I mean, it's just all over the place. It's a big pump and dump, and just, yeah, I still like Loopring as a project. I've, should have bought more Matic and all that story, but Loopring's a good project with good people. I've been around the Discord and talked to some of the people. They're good people, and obviously was based here in China. I was in Shanghai before the restrictions changed. They've sort of moved to Singapore and elsewhere, but they're a good project and they're doing some good stuff. It's got some good news. So I'm still holding a bag on that. It's not bought it on the way down, so it's averaged back in, having sold on the pump. Could have been more patient and just waited for it to capitulate, but actually it's earning quite high yield, variable high yield. Just stuck it there and said I'll leave it speculative and see what happens. So I like what they're doing. Mm-hmm. So obviously, just perhaps if we look at the news quickly, and then we'll go back and have a look at some of the equity markets and stuff quickly, and you can edit that around as you see fit, and then we'll go from there. So Ethereum wise, just looking at the news and where we are. So I think the big, obviously we broke a headline on the fee burn. We broke the 2 million ETH burn. Now the rates slowed down as crypto's gone quiet. You can see we're at 24% offset last week. So it's come down a lot when it was up near 100 for a good while in NFT mania. But if we look, we've still got OpenSea at the top of the burn list. There's still activity there in Uniswap as ever, with trading. That continues to be near 60% offset since we started off. But we have been seeing time now where, I tweeted out, we've had gas. I was doing some moving things around. Gas was at 15. So, we've not seen many tweets about Ethereum being so expensive lately. So, we've seen some things. You can set up smart contract wallets, for example, on Loopring, or the full one with Argent, etc., for $20-$30 rather than the insane numbers they were. So if people are in that space, it's not the worst time to be looking at it. I mean, this gas is a little higher than it's been recently, so we'll see some activity today. So obviously the big news this year really for Ethereum, we're expecting to see, is the merge. So we talked some months ago about they had a sort of small conference with Ethereum, and they were doing some live initial testing of the merge. Well, there've been some more testing going on. Obviously, Tim's account is one to follow if you're interested in what's happening, because he's sort of minutes everything in all the dev calls, all of the things that are happening. So this was just a note at the end of their one of their test nets going through the merge, where it worked. It merged. It came out at the end with transactions in the blocks. So the process completed. And then there was an issue with one of the clients. So again, I've been in IT, as you have, long enough. I've run dev teams. You do testing because you want to find these things. So I see all this is very positive. There's like a list of things that came up during this testing. So one of the Prism client was a couple of bugs, and this was just one of the threads where the developers had fixed those problems. So as I understand, those things are now understood and are being, if not already, fixed. So we'll see this repeat. So we expect to see more and more of this coming through. So obviously a lot of the things people ask, and you see it on Twitter, is when. Will it be June? I don't know, is the answer. This sort of upgrade, this is like a massive IT project upgrade. You know, it would not surprise me if it was a little later in the year. I don't have much to go on other than just reading through the Twitter threads, but I think what's most important is that they do commit to doing the merge when everyone is happy across the ecosystem, who all the people, all stakeholders involved in this testing. You know, I'd be the first to be very nervous if I don't see that happening, but this, what I'm seeing and reading the minutes, looks very solid. They're doing all the right things. So just adjusting my screen so I can see everything here. So we also saw the news on Loopring. So what is it that's very bullish with Loopring? Well, I think there's two things. There was this announcement with GameStop, NFT marketplace powered by Loopring. This has been rumored for some time, as one of the former people involved in Loopring went to work at GameStop. But we had a 45% pump yesterday on Loopring, and this was confirmed. So so I'd say well done to everyone at Loopring. Again, this is the sort of thing I'm interested in particularly, which is real world application, high profile company. Yeah, high profile for all sorts of reasons in GameStop over the last year or so. And again, a big announcement of real world application here. So much going on with the NFT place and gaming at the moment, the virtual worlds. We've talked about it before. And we just saw this stat recently, March the 18th, which was, you know, there's over 1 million NFTs now minted on Loopring. So they're making some headway, getting some traction with their technology. I've always liked their exchange, and their ZK rollup implementation has been, you might say, it's a little bit more tailored. It's very low level. It was optimized almost straight away when they did it, but it meant it wasn't generic like some of the other ZK rollups have tried to be, so that you can put all the applications on. Loopring took the approach of, we'll build our own version and then we'll add functionality to suit our application suite as we go. So they've sort of done it slightly differently, and but they're very, very efficient as a result. So I'm just I'm staying invested and sort of wish them good luck. We can see we've had a little bit of a correction today. You know, it's back down 10%, but you know, good to see. So it was just seeing some positive signs again. There's nothing that's worrying me currently as a big ETH bull that I'm seeing going on in the ecosystem. And then if we move on from that to perhaps the wider markets to feed into my sort of other piece then on where we are in the macro world. As ever, sprinkle salt on whatever I say with these things. You know, I've been in business a long time, but I'm not a macro economist. I'm just saying what I see. DXY, and we've talked about this forever being a dollar story, what goes on a lot in the world because it is the reserve currency. Really, you could argue from 2014 here, we're sideways in this. We've had these wild moves where we've had these crises and things in the world, but we're still sideways in this range. We've come up again and found resistance at the same kind of areas that we found previously. So as ever, these long-term weekly areas do offer resistance. But I think there's obviously bigger stories around the dollar at the moment, which we'll come to in a second. We are seeing this yield rising. We're seeing some commentators talk about the fact there's selling of treasuries now taking place. Some have said it's dumping, although I don't know, clickbait. We'll have to see over a little bit of a longer period what the actual story is, because you know these things fluctuate anyway. We can see we had this type of spike up here in 2018 when the rates were rising, etc. So but there are signs at macro level that things are, could be changing, which we'll come to in a minute. These charts are interesting because we've talked about this for ages as well together. NASDAQ. So I had this channel, this long-term line, which again is approximate, it's a trend line. And then there was this heavy 4-week, I've sort of switched some of my monthlies to 4 weeks as they're slightly tidier on these charts. We actually came down almost and tapped exactly this area of this big kind of area of support here, and we've bounced here, and we're a day obviously from the end of this 2 week where we've got a big engulfing candle here. So that's pretty bullish looking candle, and we're back into the top part of what I had as a channel, clearer channel on a slightly lower time frame. But no, so kind of interesting because it was, we come down here and it's like the world's going to end, the NASDAQ's going to head off down here and we're never going to see it again. And we've once again, we've got this big bullish move on the NASDAQ. And, we've talked about it before. I'm still in that camp. You can see the data that says there's just so much money in the system from all the printing. It's very hard. You've got inflation, which will tend to just inflate these companies' market caps as well. So,
well, and earnings. I was explaining this on the Discord server yesterday. I put a tweet out on it too. I think people are not really thinking about the dynamics of this. I think people think, okay, the Fed is starting to raise rates and starting to tighten. So now everything's going to reverse, and because the Fed isn't injecting money, that everything's going to crash. Well, that takes time for that tightening to take effect, and more what's going to happen is, you said, so there's a process. It takes about 4 years for that, when there's a huge expansion in the money supply, for that to really make its way into the economy. And what happens is raw materials go up first, and the cost of manufacturing goes up, and manufacturers increase rates. And as those rates rise, the other part of it is things start to become more expensive. So then services also start to raise their rates. So the service industry will start to have to raise their rates, but they're one of the laggards. But then in order to keep up with inflation, once the raw materials and once manufacturers and suppliers have resigned themselves, they have to raise their prices because the raw materials are going up in price. Then everything goes up in price, and then we have a kind of a reset where salaries and wages are the last thing to really increase. Once salaries and wages increase, then service industry goes up. And you have a second kind of round of inflation that again leads wages a little bit, but then there's a whole new. So all of that said, we're in the early innings of it. We're maybe 2 years in. So this is going to be the big inflation year. This is when wages start to increase to match the inflation that's happened already. And when that happens, there's a big surge of fresh spending into the market, and that's where these earnings. So all these companies' earnings are going to go up 20% almost overnight, just purely on the fact there's more money in the system and there's more wages being paid out, and they've marked up their prices accordingly, so forth and so on. So earnings and everything's going to go up. And so when you look at all those multiples, the multiples are going to come down because earnings are going to go up. And guess what? Now there's more headroom for stocks to move up again, and it won't actually collapse until we have a situation to where stocks are truly overvalued and the money velocity is heading the other way. It's money velocity is slowing, right? So the rate of new money coming into the system is finally slowing down. That's when you get when the markets become complacent again. The Fed's already taken action, tightening's already happening. Money is actually not being pushed into the economy at a really aggressive rate while things continue to rise, or equities continue to rise. When that final disconnect happens, it should be a year or two from now. Then you have your big sell-off. But that's
if we think about forward-looking markets, and we can see, and there was questions here, and I replied to some Twitter stuff about, well, we will see how much is priced in, already, because we knew what the Fed was doing when you look at this, and was it priced in? And then lo and behold, we've had a crisis in Europe and the dollar's gone up, but hey presto, the markets have rebounded hard. It's like when the Fed did raise rates, well, there we go, it's happened. So, and then the markets just sort of bounced back. It got oversold and it's back up now into resistance again this week on the S&P 500. And of course, there's still macro uncertainty. Now, if you want an even crazier chart for the long term, then Hong Kong's been absolutely bonkers for the past couple of weeks here. We lost this long-term channel, and I mean, we zoom this out, it goes right back. This up channel. So we had a sort of capitulation, almost like the COVID crash, obviously worse from the market in terms of the bottom. It came right down to a level not seen for a while, but then we got the most insane bounce. So this has been stocks of some of these stocks, like growth stocks, have been all over the place in Hong Kong. They've been down 70%, and then one day they bounced 35%, followed by 20%, and then they've been all over the place. So that's been a trader's market, I guess, for the brave who've been in there. We've seen it's come back up and just hit this long-term sort of channel here, and just holding up, pushing back up. China's eased a little bit. Still interest rates are much higher than in the West here, but they've eased a little bit at a time when obviously there's supposed tightening. I say supposed because if rates are now 1 instead of half or something, it's not like there's any interest rates. I think people have forgotten what interest rates actually look like, where mortgages are 7-8% or 6%. I think the rate here was 5.4. I saw sort of bank rates for mortgages. That's more like what I would have remembered in the UK, a more stable time. We're still in much of the West in this place where there just isn't any interest rates in the end. I mean, there's still nothing after this raising, so money's still very easy. So different, China's eased a little bit at the moment. So interesting in Hong Kong, and then we've been watching Tesla, and we've had again, like the wider Nasdaq, we came in again. I had this is my weekly. We had 779 on the chart. We whipped down. I mean, we whipped down below 700. So some people probably picked up a good deal if they were waiting for the 40%. All these patterns, we came back 40%. This one eventually came off 40%. Now we're up again. And you will have seen, I'm sure, you may have followed the Tesla news. Berlin has approval. First cars are shipping out of Berlin, and I believe they're very close in, if not already approved in where you are in Texas. So lots of big news out of Tesla. So obviously I'm just looking at that because we've talked about it previously. What I think we can say is whether we recover this channel fully, this may be like we've had with the Nasdaq slowing down, maybe this insane channel where everything's being propelled up from the bottom of the COVID crash. At least now we're kind of coming out of that a bit and going a little more sideways, and perhaps we'll see a bit more of a slightly more leisurely rise here. And a bit like we've talked about with Bitcoin, you could say Tesla's market cap's getting so big and the company's getting more mature. Whether we'll see it doing this again, I mean, it's like a crypto token. I mean, it's a mad chart. So it's you'd like to think maybe it will still do some multiples, but is it going to 10x again? I would have thought not. No, it's a more mature stock.
Yeah, at some point momentum will slow down, but you have to the market, again, it's forward looking. So I think at this point, a couple of years ago, Tesla was a bet on, is it going to survive? And now Tesla is obviously going to survive. So the question is forward looking, it's a bet on AI, and how successful are they going to be? How are they going to be the leader in AI, and what other innovation comes out of that? So on the cars front, if you get autonomous vehicles and autonomous taxis and whatever else, could generate an enormous amount of revenue, plus their energy side of the business. But then you get the other, what other things are going to be able to do with AI, and how much is that? And is that worth what's a market cap of the leader, in the next 20 years in AI? Is that more like a $10 trillion market cap? Then yeah. So it just depends on, the market's sentiment around, AI, and Tesla is currently the leader. And so if they maintain that leadership position, then what doors does that open up, and how big can it get? And like your point, I mean, what is Tesla's market cap right now? I haven't looked in a bit here.
No, I mean, it hit, obviously got up to a trillion. I have to see. I'm not.
Yeah, it got up to $1 trillion, but I don't know if it stayed there.
Yeah, market cap, yeah, $1 trillion. It says on here 1.036.
Yeah, so I mean, it could pretty easily 10x and not be at a too unreasonable $10 trillion company for the leader in like the AI space, which is like untold amounts of potential there. Like,
it's interesting with the macro position, because whether it's a threat or not, I mean, I think Tesla's got every chance of dominating in the West, irrespective of what happens in the rest of the world. You look at the competitors that are still there in the Western countries. I see competitors here, but in China, but I don't see the competitors in the West at the moment. They're all sort of going nowhere. I don't mean that as making cars, because there's a lot of companies that can make a car. It's that technology play and all the work that goes into that and how hard that is. And I think, and the value of licensing that in the future, and a lot of the other areas Tesla's looking at. So yeah, I agree with you. I'm very bullish on it long term. But I think, and I think still a lot of people can trade this and make a lot of money trading it. It's still very volatile, but it's just going to be slightly more, I think, we might get a more sensible chart now, at least on Tesla looking forward, where it's not like an Elon rocket just and every time he tweets, everything's bouncing everywhere. We'll see. I mean, we'll see what happens. I suspect Dogecoin was up earlier, but I suspect Elon's tweeted again. I didn't go and have a look. So perhaps the final piece was just do a little bit of what's going on in the world at the moment, and we've touched on it there with Tesla. So I've put a few things on Twitter, but I'll just have a look at them now. So this is a curious map. This is the map of the world with who is applying sanctions on Russia at the moment. Because if you read the Western media, obviously I get the UK news because I still follow that. You would think, and I saw quite a lot of crypto people who perhaps are not really into geopolitics trying to talk about it slightly, saying, well, the world is united in sanctioning Russia. Well, the bits in yellow are the bits that are sanctioning Russia. This is the Western countries. And actually, if you step out of that space and you look at the Asia here and China and India, where all the people are, and then you look at Africa, there's nothing. You look at South America, you can't really find anything. In Asia, you find Japan and you find South Korea and you find Singapore. Sort of little tiny speck out here, and really there's nothing. And I think this sort of sets the scene for where we are a little bit at the moment, because and I say this as a Westerner, we've had an empire. We had an empire in the UK, British Empire before the American Empire, and in and around that, before that and around that, we've had other countries in Europe that have been out across the world, colonizing imperial powers. I think that often in the West, it's a bit lost what the feeling is about that in these other countries, and a lot of the conflicts and other things, these things that have caused people problems are more recent, I think, also than some people care to think about. I mean, I tweeted out when I went to the Korean War Museum, that's the 1950s, but you've got people alive who remember that. Very strong feelings, and that sentiment is still here. This province of China was heavily involved in that conflict. It's very near to Korea. And that was perhaps the first, if you go through the list in the current sort of what they might call world order in the US, So this map is quite telling at the moment that there aren't the sanctions coming from these other countries. They aren't into sanctions. It's not their way, that economic warfare. They've been on the end of them, most of these countries. So we're seeing this kind of split, and it begs a lot of questions. The thing I think for people is these things don't tend to happen overnight, these shifts, shifts from one currency to another over time in empires have taken time. They've taken big events, they've taken time. But we have seen over the years that every attempt at trading, particularly oil in another country, has been shut down. So we've not seen any traction at all, really. But this conflict now, which is, Ukraine here in the middle, a little spot, it's what should be a European issue based on where it is geographically, but for all intents and purposes is an east-west kind of conflict in various ways, is bringing a lot of things back to the fore. You're starting to see every little dispute about territories coming back up. I saw the Falkland Islands came back up for the UK, which was, we thought had gone away, which is, is a piece of territory, is like a nothing. But lo and behold, it's back in the media. This is what these sort of situations do. Everything comes back up. And we're starting to see some movement on things. And I've just collected a few things up. So the governor of the Reserve of the Bank of India says the freeze on Russia's forex reserves is a wake-up call for every country. That's the quote from the governor of the Reserve Bank of India. Now, you've got a system which is based on the US dollar, and most countries will have thought that their reserves, which are generally invested back in the US, it helps you guys fund your deficit over there. You can borrow money. There's lots of it available. That was a safe place for your money. So seeing that Russia's forex reserves are officially frozen, and we've seen Afghanistan as well, we're seeing countries that, and obviously India was, perhaps you could say, more of an ally to the US than China or Russia, are starting to ask questions. And it's not the only one. And we saw the confirmation that India bought oil from Russia in rubles trade pair. And if you just said that to me a year ago, I would have thought that was mad. We're going to see India buying oil in rupees and rubles as the pair. It's just something that you didn't think you would see. And then you see just in the last couple of days, they've called it here, there's a headline, but it's Russia has said you have to buy our gas in rubles, which we will not sell you it unless you pay in rubles. That's their response to the sanctions. So there's all kind of chaos in Europe now with people headbanging and shouting. It's just not things we thought we would see. We see here, this is a program on CGTN, which people could look at, which is just the Chinese media here for people who are in the economic space. They were talking about Saudi Arabia, who were saying their biggest trading partner for oil is China, and they may trade it in yuan. Now, obviously, Saudi's been sat at the back of almost like a linchpin of the petrodollar system for a long time, and their currency is pegged to the dollar. Again, you wouldn't expect to see this. Obviously, a very much a Western, I'm from the UK. They're an allied country in terms of the military and things that we've done as the UK over the years. Would not expect to see this. So this again is throwing out questions you would not expect to see. And then, of course, for the crypto people here, Mr. El Salvador likes a bit of attention, and of course he's been tweeting, but the US is, whatever this is, this just indicates there's an investigation going on as to whether Bitcoin as a currency is compliant with all of the US regulations around the US dollar and et cetera. And I guess he's decided he can poke the bear a little bit as well. Obviously, a very small country that actually is very dollar based. They use the US dollar, as I understand, in El Salvador. They're mostly fossil fuel based as an economy. So again, if he was doing this on his own 5 years ago, this in a macro scene, you'd almost call this suicidal as a move. But now you just start to see people are coming out of the woodwork saying, well, maybe we don't need to trade in dollars. And if you take that a little bit further and look at the big macro position in the world, so let's just look at the China news before the war. China-Europe trade, first 2 months of the year jumps 15%, year over year. The largest trade partner of China was Europe, first 2 months of this year. If you look at FDI in total into China, amazing, up 38% in the first 2 months of the year from around the world. So extraordinary. If you look at what's really driving that, and this is one of the most visual charts you can see. And I mean, this is almost like my lifetime. I'm looking at what I remember growing up and trying to understand in school and whatever, learning a little bit about economics. This map as a graphic shows the blue is where the countries are the largest trading partner is the US. And if we go through the years, we can drag this forwards from in the 1980s. You just look how blue this map is. So this is the 1980s. This is when I was a kid, growing up. And the UK very heavily allied to the US. Everything's about dollars. We have the fall of the Soviet Union around this time. Big events in the Berlin Wall comes down, and then eventually we see the Soviet Union disbanding, and we see, things go neutral on this are when they go to gray is when their trade with China and the US is roughly equal. And we get through the 1990s, the map is still very blue. And then we get into the 2000s, and then this thing starts going red. So you see Russia red, you see Africa here starts going red, 2005, 2010. And look, we're going red. Now, of course, you've got bits of Europe here still more neutral, but it's going red and redder and redder and redder. And this stops in 2018, but it's actually continued in that point, to the point where this is where I think we have this friction. We saw the trade war started between the US. Obviously, the UK's been backing the US's position from my perspective as a British citizen. This is what this world map looks like in terms of who's the biggest trading partner. Looks an awful lot like that yellow map earlier, yellow and gray. And so are all these countries going to apply sanctions that cripple their own trade, which is really what they're being asked to do? And they've all said no. And we also know that the trade between even the countries where it's blue and China is now extremely high. And you can look at this map a different way. This is a different look at this from 1990, just who was partnered with who, if you like, on one of these different forms of chart. And you can see there's trading partners here for Germany and France and the UK. And you flip this to 2020. And yeah, you've still got some things with Germany over here. But look at how the rest of the world's reorganized completely. China's in the middle here, but all these other countries. You can see Russia here, we've got Australia, etc. And then the US, this huge trade flow here that we talked about recently when we spoke on this on your channel. And we have all of these other countries and still, the UK's in here with the US. So extraordinary. And it's hard to know exactly where we go next. And I'm not promoting one cause or another as usual in this. I'm just looking at what's going on at the moment. And I'm seeing so many things, even in the last 6 weeks, that I didn't think I would see anytime soon. Whether it's political things in Europe, some of the things that are going on, and I think you probably know your thoughts, but we're seeing some freedom of speech related things shut down in the US, which I'm very surprised at. You wouldn't necessarily expect to see that today. It's not like you're directly at war. It's like we're not in the UK directly, it's sort of indirectly. And but we're seeing a lot of things happen that you think, goodness, I wasn't expecting to see that. It just makes it, you could say, uncertain. But if you see this de-dollarization process and you see the little tweet from El Salvador, is this indicating that, is this going to be bullish for crypto, as that's the main point of the channel and what we talk about? But if we saw a de-dollarization, people getting rid of their treasuries, we're seeing, et cetera, central banks having to reposition where they hold their funds, and this flow of dollars back to the US starts to come under pressure. And more countries say, well, if we're not trading oil in dollars with China, why on earth would we trade everything else? Why don't we just trade in yuan or trade in our own currency, and we'll share each other some currency, and we'll diversify our risk of where our central bank holdings are. I think for Europe and the US, the West as a whole, if that plays out, that's, call it world order, call it whatever. It's a lot going on that's, for my, not quite 50 years yet. I've just got a year older recently, and I'm not, still got a little way to go for that. But in my lifetime, this is the first time that system, that order, if you like to call it that, I don't tend to like calling it that, but that status quo is almost a better phrase. I think the status quo is being challenged. And you've touched on Ray Dalio before, and I've heard a little bit about what he's had to say along these lines, that things are being challenged. So could it be that we do see this weakness in the dollar? Well, it pushes the dollar price up. We've got inflation maybe running. I think it's much hotter than the official number. That should be very, very bullish for Bitcoin and for crypto, and then Ethereum and these other assets that we hold. And if we go back to, is our base case, we're holding a lot of this personally because it is a hedge against all this uncertainty. It could be that theory really starts to play out. And in these types of environments, if we do see inflation run, it's not happened in the West, it's happened elsewhere. We've seen it in so many places where inflation's got very hot, often off the back of the action is taken against countries that don't want to play ball in the current system. Could that happen in the West? Well, maybe we're at the start of that. And then you want to own assets generally in those things. You certainly don't want to own cash, You're 10% a year. I mean, it doesn't take long. In 10 years, you think back, we've all worked, you're old enough to have worked a while now, much younger than me, but it's a while. 10 years is not, that's, and then your money goes 10% a year. Well, you've got any left. What's happening there? Your buying power's gone.
It's crazy to see. I just bought movie tickets yesterday for this weekend, and the movie tickets, so 2 adults, were about $20 a piece for movie tickets with the convenience fee. It was like $50 to buy a pair of movie tickets.
Goodness
Remember, people used to complain about going to the movies. It was like $20 to go to the movies. The tickets were a couple bucks, and then the popcorn. Like when I was a kid, you could go to the movies with 4 people for $20 and buy some popcorn and drinks, just about, right? When I was little. Yeah. And now it's like, it's $50 just to get in the door. I mean, going to the movie theater with 2 people is dinner and a movie used to be 2 people, dinner and a movie is like a $50 thing. Now it's like a $200 thing.
That's crazy. Yeah, I mean, I've seen food inflation here from when I first came because of commodity prices, but also living here has been a massive reset for me in the cost of things. Even just buying a few electrical appliances here, we've moved and we didn't have them provided. We bought a few things. They are literally like £10 each for these domestic appliances in China. Everything's so cheap. I'm sort of, public transport's cheap. Things are cheap. I'm sort of going through this huge reset on what things cost. And then when you sit and you think about it, you think, well, how have they ended up so expensive at home? And the same for running a business. You find out from people what things cost, what their overheads are like. And it's not their wage overheads, because wages here are not that low. I mean, people are moving business from here because wages are, certainly in our IT world, wages here can be comparable at times with the Western wages, at times for skilled jobs. But you've got this cost of living that's so much lower. So you have to start to wonder. And as you say, if inflation here is still running at 1%, 1.5%, and of course, some of it's controlled, the government has price controls here, but it asks you a lot of questions. You just start to have a big reset. And as you say, you go back and think what things used to cost not that long ago. It's crazy. you know, these some things here, you know, buy things are 1 yuan, it's like 12 pence in sterling. It's like, what? You know, it's different world. And yet the things I'm buying in the UK, so many of them are made here. So how's everything got so expensive? Is it an economic system failure? What is it? But back to inflation. There's so many things then that historically happen. Unrest is one. You know, if you go to the bottom 50%, and we've looked at, you know, I've put it on Twitter before, the wealth is so skewed in terms of who has all the wealth that it's not going to take much before you've got severe unrest risk at the bottom, because people literally can't pay to heat their homes. We've seen this heat or eat line used in the UK by some of the politicians, but people I've spoken to say that is completely true now. You know, and that's crazy. How have we ended up there? So there's our 5-minute chart for the short-term traders.
Well, yeah. So we normally we're used to it dumping. I'm about to say it's about time for us to wrap up.
Plenty of time for that.
And right as we're wrapping up this chat, you see this big green candle. This is because while we were talking here, I got my phone blew up. Russia has said that they're going to be accepting payments for exports in Bitcoin. They just came out and announced that right there. There
we go. So we were talking about just as we're talking about the macro position, and we're talking about El Salvador's chirps, and you know, I haven't touched on today. I mean, we can carry it forwards to next time, but there's a whole piece around, and I think, I don't follow Pomp, but I saw one of his tweets which said, if you support some of the principles in crypto to do with immutable, decentralized transactions, then the people you dislike are still going to be able to transact in the system. And that's a fundamental part of what we thought this all stood for. Because we have seen, and I got another quote, the digital minister in Ukraine was asking the West to sanction all the crypto transactions. And you have to ask, you know, well, okay, but that's not the point of of crypto. If we go back to some of the principles of why we're here, not just as a money maker. So again, there's some challenges. Who's challenging who, and what's going to happen next? Because, you know, you can censor the exchanges in the West. You go back to that yellow map, you're going to sanction the crypto exchanges in all those places that were yellow on that world view, but you can't sanction all the others. So how is that going to work? You know, can you stop Russia setting up a Bitcoin to rubles exchange for that? No. And you can't halt the transaction when it comes to sending or receiving. You can only use law enforcement and sort of brute force in the West trying to track and KYC wallets to try and halt this trade. But you can't stop the other countries from trading like that, unless the plan from the UK and the US is to sanction everybody. But that would seem to be, that's that old Chinese phrase that's come up a bit about, you've picked up the heavy rock, but, you know, be careful you don't drop it on your foot. Seems to be where that's going. As a Westerner, I cannot see how that works. You know, that, you know, you're going to have such a cost of living crisis if you go down these roads with sanctions, where you start sanctioning China and all the companies you actually buy all your goods from, and it just turns into chaos. So, you know, and you know, I've said for some time, Brandon, you've seen it back in 2020 when it wasn't as fashionable, but I always thought sanctions were the problem for the West with crypto. They're always going to be the problem, because it's been this, you know, I haven't got the graph to hand, but there's a sanctions chart which just shows it's up and to the right. You know, it's like what you want Bitcoin to look like is the number of sanctions applied. It's been that zoom up, just up and up and up over the last decade. And it's just a point of is things are going to unwind eventually. You just sanction yourself eventually with sanctions. They're known to be a boomerang. So, you know, look at the nickel chart's been absolutely insane, the price movement.
Yeah, it already retraced all the way, didn't it? I don't know if I have it here.
It's come back and it's sort of been bouncing again. Yeah, I mean, it's insane. there's all this uncertainty now about the price of a lot of things because Russia's a major, and Ukraine was as well. I think people forget Ukraine was and is a major exporter of things. You know, it had a lot of economic ties with China, had a lot with the West and with Russia. So, you know, big exporter of things, a lot of resources. So, mass uncertainty everywhere.
Yep.
We've got silver going up.
Yeah, silver. I just noticed silver broke out a bit ago. A little bit. I mean, it's a small. It's still breaking out of this pattern here though. It's probably, but yeah. So it might be the next one to pull a nickel. I don't know if I have the Cisco nickel futures here as nickel spot. Nickel. It was the futures that were running pretty heavily, right?
I was looking at the
it was the futures.
The New York thing. I mean, it's been the maddest sort of. It's a .com style candle. It's just like, what is
that? The 4 hour. Here's your 4 hour chart.
Yeah, and down and then bounce, and we'll see what happens now. Yeah, there was some talk in the Chinese. So I saw some stuff about some traders getting caught in a squeeze there, but yeah, curious times. I mean, Bitcoin for oil? Have we got the petrocorn or something? What on earth would that be called? I don't know.
We'll see what happens. But yeah, so this is it's going to be the news of the day. People digesting that here. All right. Yeah. Well, Alan, thank you so much for the chat. I really appreciate all your insights and sharing with us this week.
I appreciate your similar. I mean, it's very interesting, some of the crypto things we talked about earlier and some of the things. So
yeah,
we'll see next week, see where we are. Who knows?
Yeah, exactly. We'll see. This is it's going to be exciting times. It's, you know, I'm excited to see what happens next here. Let me stop sharing. But anyway, thank you again, and we'll wrap up here.